I just totally missed the fiscal part, that the government was going to spend their way into oblivion and not worry about the devaluation of the currency, which is why Larry Fink went on TV and said, maybe you should own some Bitcoin. You should buy it from me, but you should own some Bitcoin to protect yourself against currency devaluation. Come on. He said that on television.
In a recent interview, Mark Yusko, the founder, CEO, and CIO of Morgan Creek Capital, shared his positive view on Bitcoin's future. This year, Bitcoin hasn't been without its share of ups and downs, and there have been multiple drops. However, according to an analyst, an interesting pattern is emerging. Going back to the 2014-2018 cycle, history shows that during the same week as now, a big price correction occurred, hitting the exact same mark as the 200-week exponential moving average. Strangely, this time around, the correction has landed Bitcoin right on that 200-week EMA mark again. Bitcoin prices are currently down 62% from the previous peak, which was nearly 2 years ago. Therefore, the bear market has lasted for 490 days, much longer than previous cycle lows. In an interview, Mark Yusko mentioned that summer is like the time for roller coasters. Roller coasters have lots of ups and downs, but in the end, they always bring you back to where you started. On August 18th, SpaceX, the prominent aerospace company under the leadership of Elon Musk, has reportedly divested its entire Bitcoin holdings. Bitcoin prices fell suddenly amid reports of hundreds of millions in sales, triggering a bloodbath across futures and spot markets. Yusko explained that Bitcoin's value went down a lot because the way Bitcoin works is a bit different. There aren't a lot of Bitcoins available to buy, mostly because many people who own them want to keep them for a long time and not sell them when the price is low. Yusko mentioned that when the stock market is facing ups and downs, the good performance of Nvidia made people hopeful and they believed the stock market would become very active. Let's direct our attention towards the few clips from interview.
Summer's time for roller coasters. And the thing about roller coasters is there's a lot of ups and downs, but you end up in the exact same spot.
Mm-hmm.
And we're doing that, right? We have an up,
I agree.
And then we have a down, and then we have an up, and then we have a down. But we end up in the same spot over, and summer doldrums are that. Now, what's interesting about this chart, and I love your point about leading. Someone asked me, why are stocks going down? Right? Stocks are down 5% over the last month. It's a big move. And it seems like they go down most days. Well, it's because there aren't any humans involved. The humans are on vacation, right? I said, we joke at the Europeans, they take August off. Haha, we work so hard. Try to get a meeting with somebody this month. Forget it. I mean, I was in Chicago yesterday. I tried to get meetings. 4 people. I'm gone. I'm out. And I don't begrudge them being out. Go on vacation. It's great. But it is fine. So the machines take over, and the machines are pushing everything down. They're pushing everything down. Now, I will agree with you that there was this exacerbation on the SpaceX, news, and there was a sharp drop in BTC. But that's the nature of the beast. The thing that people forget about Bitcoin is it's not really liquid. It's not really deep because so much of the market cap is hodlers or hodlers, however you want to pronounce it. And they're just not selling at any price. But the same coins churn over and over and over. And that's true of most things, right? Microsoft, there's a whole bunch of people that never sell their Microsoft, and there's stuff that churns. The index funds don't sell their Microsoft. And so when the free float is very small, you can get this is a chart. This orange and light blue line, those are machines. Okay. The dark blue line is humans. That's a human reaction. That's fear. That's a human reaction to a new piece of information. The orange and the blue, like I said, the institutional demand, that had nothing to do with institutional demand. It has to do with machines, with Ken Griffin saying, everyone's on vacation. It's not Ken, it's Ken's massive team. And it's not even really a team, it's robots. So it's the robots saying, okay, we pushed stocks up the first half of the year when no one thought they were going to go up. And we made a ton of money because people were chasing. Now we're going to push down, and we're going to seed the clouds, and they're going to go down for a while, except for NVIDIA, in theory, right? Which, said, well, we're going to have all this revenue this quarter. And stock popped after hours. But then where did it end up at the end of the day yesterday? It's interesting. Flat. It was up 8% at one point, ended up flat. Stock market crashed yesterday. If you would have said NVIDIA, actually people did say this 2 days ago, if NVIDIA beats, already raised expectations, the market's going to go crazy. Well, it did, but not up crazy. It went down crazy. And we'll see how it levels out today. But that's the machines. The machines, again. And if you look at volumes in the summer, they're really low. So none of this is really that much information. Ultimately, Bitcoin, when the ETF's approved, that's when the bull gets his cape back.
Federal Reserve Chair Jerome Powell argued for holding the interest steady for now, but keep the door open to rising them later this year if the economy does not slow enough to keep inflation declining. Cleveland Federal Reserve Bank Loretta Mester said, beating inflation will probably require one more U.S. interest rate hike and then going on hold for a while. She said the longer we let inflation remain above 2%, we're building in a higher and higher price level. According to Yusko, in a normal capitalist system, positive interest rates matter more than the specific percentages like 5%, 5.25%, or 5.75%. The important thing was to shift away from the ZIRP, zero interest rate policy, situation.
I think we're back to normal, but because we were in abnormal for so long, meaning ZIRP, that people don't know how to listen to the chairman anymore. They don't know what normal interest rates are. We're supposed to have positive interest rates, right? That's how capitalism actually works, right? There's the promise of earning when you put your capital to work. And so the difference between 5.25, 5.5, 5.75, it's irrelevant. What had to happen and what did happen was we had to get out of ZIRP, which was designed to save the bank's balance sheets. And we have to go back to a world where they can actually earn some money. And remember, the Fed only exists for the banks. It is a private corporation, not federal, no reserves. It is a private corporation owned by the banks and the families that own the banks. And its job is to maximize bank profits. So that's what they're doing. And the fact that everybody thinks that they control everything else is why people are missing this fiscal mess. And so the thing I was totally, I won't say I was wrong. I just didn't see it, because it's not like I said the opposite. It's just I didn't say this, which was, if you looked at all the data coming into last year, and we did, right? PMIs were collapsing, services and manufacturing, yield curve was inverted. All these things were saying serious recession. And I said a couple weeks ago, I said, look, I was wrong. I mean, everywhere I go, restaurants are full, airports are full. I mean, O'Hare was a nightmare yesterday. I mean, it was crazy. People are spending. Well, how the hell are they still spending? Well, it's because the government handouts in the form of disability payments, unemployment payments, all these direct government stimulus programs. And turns out there's still $300-ish billion left in the coffers from the handouts from a couple of years ago. And credit card debt. I mean, credit card debt has gone absolutely, I think it hit $1 trillion for the first time. I think I have that stat right.
Bitcoin has been on a downward trend since reaching its all-time high in November 2021. Bitcoin has hardly moved over the weekend, sitting at around the $26,000 price level. The asset is flat on the day at $25.9. Bitcoin prices are currently down 62% from the previous peak, which was nearly 2 years ago. Despite the recent volatility, Bitcoin remains a popular investment among institutions and businesses. That wraps up our conversation for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.